Markets Now is brought to you by the 5-year anniversary of Brevant Seeds. Here's to 5 years of not just winning, but collecting one game-changing W after another. See all of our wins at brevant.com/wins.
And welcome to Markets Now. I'm Michelle Rook with Elaine Akre with Pro Farmer. He is the economist there, and we're seeing mostly higher prices this morning in the grains and hogs. We've chopped back and forth a little bit here in the cattle market. Okay, Lane, let's talk about soybeans because we have been seeing some gains after a higher close yesterday. Let's talk about what's kind of pushing the bean market right now. Is this all short covering, or is there something fundamental that's pushing the market?
I think there's a big mix in it, and part of it I think can even be talked up to some technical buying. So we pushed above that 20-day moving average yesterday, basically for the first time, closed above it. We're seeing strength above that today. And that was a key technical level that limited the upside prior to last week's reports when we saw that big downside move, largely led by corn. And soybeans have kind of taken their turn leading strength here, despite a bearish report last week. And I think some of that is some skepticism that maybe the balance sheet isn't as negative as what USDA published, and soybeans kind of breaking away from the weight that they've felt in corn over the past really several weeks. So USDA ratcheted down their export estimate to 1.575 billion bushels, and China continues to chip away at purchases, and we're gaining market share elsewhere. And hitting 1.6 billion bushels wouldn't be that crazy, even 1.65 billion bushels, and that quickly puts the balance sheet in a pretty tight scenario. And with the mild weather that we've had, there's been a lot of fall and even winter fertilizer applications, nitrogen going on fields that are basically locking in corn acres. So we've seen this last couple of years, especially last year for the 2025 crop, when we saw an explosion in corn acres. And one thing that we track pretty closely, especially this time of year, is the soybean to corn ratio. So that ratio has a 10-year average of about 2.4. Last year, following the tariff threats on China, the market knew that we weren't going to be exporting a lot of beans to China. So that ratio fell down to about 2.25. And that's when we saw acres explode up to that 98 million acre mark. Now, this year, this week, that ratio has basically went from 2.3 up to 2.4, so right near average. And above 2.4 is where we start to see soybeans really start to gain more market share. But the change hasn't been that big, and the likelihood that we're going to be seeing high corn acres again in 2026 is pretty likely. We increased our estimate from 94 million acres to 95 million acres this week. S&P Global's at about the same mark, and we're dealing with 2.2 billion bushel carryout in corn. And a lot of people think that USDA is pretty optimistic on that front, but their estimates are pretty achievable at this point. That feed and residual number is a little bit more attainable than what a lot of people think, and we can touch on that here in a minute. But I think the market's really trying to buy some soybean acres for 2026, and I think that's a part of the strength that we were seeing because a lot of those decisions are happening right now.
That makes a lot of sense there. Okay, so if we're bidding for acres, how high do soybean prices need to go to pull some of those acres back? Do we have to get above $11 here, do you think? Or, and we keep running up into chart resistance right now at these points.
Yeah, I think $11 is a pretty achievable target, but it's not only what soybeans does. If corn just stays at 420 like it's done over the past week, I don't think soybeans are going to have to work that hard. You get pushing above $11, and I think people are going to start planting more soybeans pretty quickly once that happens, especially if that ratio gets to 2.5, 2.6. We've seen that happen earlier in the 2020s when there was a lot of hype and a lot of exports with the phase one trade agreement, a lot of hype with crush. We saw a lot of soybean acres. So, that ratio can get out of hand pretty quickly. And the key pricing period for this ratio is that February crop insurance period. So February 1st to February 28th. And, we're looking at it a little bit early, but can't imagine too much is going to change over the next week before that pricing period starts.
Yeah. If you get soybeans above $11, Lane, do you finally get corn to break out of this new trading range that we're in? Because 425 continues to kind of cap it.
I continue to think that we're going to basically push into that sideways range that we saw from October until that report earlier in January. So I think we're going to be kind of range bound between 430 and 470. And I don't see a whole lot that's going to push prices below here. I think, $4 is a psychological level is a very hard floor. I'm hard pressed to believe we're going to get below that at all. And the support that we've seen near 420 has been really encouraging. And there's obviously just incredible demand for the crop. We've pushed prices any lower, and export demand is just going to continue to ratchet up. I think we'll gain a lot of market share there. There's a very obvious demand for high quality U.S. corn.
Yeah, for sure. All right, so South American weather. Is the soybean market at all concerned about that? Are we putting any weather premium in that market at all right now? It is pretty dry in parts of at least Argentina.
Yeah, I don't think we're pricing in much weather premium right now at all. I think the market's kind of shaken a lot of those concerns off. A lot of consultants continue to ratchet up their crop estimates, and we might get a little bit of a weather push in safrita corn. I'm expecting that at some point in February. There's always concerns that the rainy season is going to end before the crop really matures. But at this point, all signs point to a pretty bountiful South American harvest. And I think that could eventually pressure beans a little bit, but we have to remember that this deal with China, their purchases, it's more of a matter of geopolitics. And right now things seem to be going pretty well with China. We're on good terms. It was a little more recently, but we seem to be past it. U.S. legislators are pretty positive, and China seems to be reciprocating a lot of those purchases. Certainly on pace to hit that 12 million metric ton mark by the end of the month.
Okay, so 12 million metric tons. Do they start fulfilling their 25 million metric ton commitments? What, in August? Is that when they come back into the U.S. market? I mean, are they out now after they get this 12 done?
So the way the Becent talks about it, he's talking in 2026. And unfortunately, these guys aren't speaking in our agricultural terms where we're talking about crop years. But in my mind, that's going to be 26, 27. So this 12 million metric tons is going to be this 25, 26 crop. And then we're eventually going to work into those 25 million metric tons for the 2026 crop. Now, if that actually holds true, it's hard to say. I'm not sure anybody quite knows exactly what China's going to do. And if I did, I certainly wish I did know exactly what they're going to do, but it's just too difficult to guess.
With the 12 million metric tons that Jameson Greer says that China is at now in terms of their soybean purchases, do you have that same total, or where are you at for China purchases? I know you've been keeping a log.
Yeah, we're certainly lighter, and we have been lighter basically since they started reporting this in mid-December, where guys started saying there are 8 million metric tons. Well, at that point, the USDA data was delayed. I was like, oh, maybe they have been purchasing more than what the USDA FAS data says. So we're able to basically keep track now. We're only a week behind with that USDA data, and China's at about 6.75 million metric tons. And if we take everything that Unknown Destinations has purchased, that pushes that total up closer to 9 million metric tons. So, still well short. And I don't think all those unknown purchases are going to be going to China. There's several European Union countries that tend to purchase that way. Even Mexico's purchased U.S. goods via that Unknown Destinations. So we're on the way, but I don't think we're at 12 million metric tons now by any means.
Okay, the wheat market up just a little bit today. Is this short covering, or are we following corn and soybeans at this point, or what?
Yeah, there's really strong support at about 505, and we've basically been bouncing off of that level. The export demand for U.S. wheat has been really robust. I just think we're staring at a similar picture like we are in corn, where there's just abundant supplies, but there are very hard floors on the market. I'm doing some analysis on the export inspections here recently, and I think USDA has some room to actually increase that export estimate out of the U.S. I just think they're a little hesitant. There's still abundant world wheat supplies. There's been good harvest in South America so far. And I just think that's really weighing on U.S. prices. And, we're somewhat competitively priced on the world market, but logistically we're facing a lot of disadvantages to those big importers.
Okay, the cattle market. like I said, we've seen some choppy action here today, and really we're waiting for cash and the cattle on feed report for some direction, right?
Yeah, that's exactly right. We've been trading within Friday's range all of this week, and on these weeks with the cattle on feed report, that cash trade typically gets pushed late into the week. We've seen very light trades so far this week at basically steady prices. But February futures are now trading basically on par with the cash market. So we're able to see some of those gains in the cash market return. We've seen solid week over week gains for the past month and a half. So I think we'll be able to see some of those premiums get built back into the futures market, assuming some higher cash trade. And I don't think there's anything slowing this cash cattle market down. I mean, fundamentals remain fully supportive. And I think the expectations, even for Friday's cattle on feed report, are a little pessimistic. I think we can get a little bit more bullish numbers on that placements and the total cattle on feed number.
So the hog market, back months have been on a tear with new contract highs being scored. Can this market continue to advance here, or are we going to start running up into some hedge pressure, do you think?
So last year we saw something similar, and I think traders have been anticipating consumers to begin buying more pork because beef prices continue to surge to all-time highs, and it's a matter of how long can consumer beef demand stay in place. So like you said, this beef demand is very inelastic. Hasn't really gone anywhere, and with the futures trading as high as they are on hogs, I got to think there's going to be some hedge pressure. We're seeing pretty solid supply prices in those summer months, and I think traders have just been really encouraged here recently with that late seasonal bottom in the CME lean hog index. We've been pushing prices higher here the past few days and just really sustaining a solid uptrend. But I do think we're going to run into some hedge pressure, especially in those summer months with really steep premiums over the cash market right now. And unless that cash market reciprocates and continues to push higher, but right now those premiums are so high, I got to think they stall out.
Yeah, no doubt. All right, thanks so much for your analysis. As always, Elaine Akre with Pro Farmer. That's Markets Now.
You were right.
You were right.
You were right.
Well, you were right. When you choose your seed brand, there's winning, and then there's...
You were right. Should have gone with Brevant seeds.
When you choose Brevant seeds, you don't just win. You get to be right. Don't just win. Win. Talk with your retailer or visit Brevant.com/win to get started.